For those who just joined in, thank you, welcome to the thank you webinar. So like I said, now here we should do three things. So number one is really thank you for keeping my dreams alive, letting me really do what I want. Thank you so much. Next is, of course, share with you what we've done over the past 6 months. Okay, what the stocks we look at. Most importantly are the learning points. Please don't try to scout for stock tips. So whatever we have invested 6 months ago is over already. So it's the learning point that matters. And what are the learning points again? These are the learning points. Okay, keep invested portfolio is key. Categorize them and invest accordingly based on market now. So income growth and high risk. So hopefully this is clear. And the third part is, of course, I want to share with you my investment strategy for 2H 2025. Okay, so this year I want to focus on something quite different for myself. Okay, I'm not stopping all my previous one. Okay, I'm not saying that, oh, okay, today I liquidate all my dividend stocks, focus on this. No. So my dividend stocks is still there. My dividend stocks are still my main investment. I still 70% of money is actually dividend stocks, buy, hold, collect dividends. That didn't change at all. That actually didn't change at all. I have 20% into growth stocks. Okay, maybe 15 to 20% to growth stocks. That means buy into companies not for dividends, but for the long-term growth. I have been preparing for investing as primary source of income. That means generating regular income today. Also be it 500, 1,000, 2,000. So there is like a monthly cash flow. Okay, so I think I started this like 1 to 2 years ago. 1 to 2 years ago. I want to start like generating like monthly cash flow, be it 500, 1,000, 2,000, 3,000, 4,000 for whatever. But the cash flow has to be monthly. Okay, so I just want to give you an update of what I have gone through and what I would like to achieve over the next few months. So again, I'm not here recommending anything. So this is for the benefit of those who just joined us late. If you're hearing this again, please pardon me. I need to be very careful. So I'm not recommending anything. I'm not saying trading is good. I'm not saying primary income is good. Okay. Really, the purpose of this session is, number one, please do some planning for your own. Okay. Please have an investment plan. So again, planning for your investment is like planning for holidays like that. If you don't plan for holidays, then you want to go to Europe to eat sushi, that's not very great. You want to eat sushi, you go to Japan. Okay, or either that you want to go see Northern Lights in June. That's not very smart thing to do. Okay, so please plan. And of course, hopefully this one gives you some trigger, some thing for you to think about. Okay, something for think about. Do you also want to try to do this, investing as a primary source of income? Or you want to stick to whatever that I have shared previously, which is again just focus on dividend stocks. So to each his own, there's no such thing as the best investment strategy. It's only more suitable. Okay, so with that, let me just share with you more about what I have experienced and what I intend to do going ahead. Okay, disclaimer, make money, be happy, lose money, don't scold me. Like I said, this is my actual investment plan, okay, for 2025. Sorry, I forgot to update. My actual investment plan ahead. Whatever suitable for me may not be suitable for you. We have different investment objective, different risk appetite. Okay, I'm just here to give you some thinking points. Okay, now, what is the difference between primary and secondary income? So yes, I have been teaching, like I said, my previous course is called Create a Secondary Income Stream through Long-Term Share Investing, which of course all of you has actually went through. Of course, now the name changed a little bit. Okay, so at that for secondary income is really more dividends. Okay, dividends And of course, we are talking about future cash flow lah. That means, when we talk about secondary income, in short, we still have a primary income. That means we are working lah. Okay, we are working today. Whatever that is actually being generated by investment, we don't really need it. So it's actually for future cash flow, or the dividends is just to supplement our primary income. So basically, the concept is it's not about depending our livelihood on that investment income. Okay, that's what I mean by secondary income. So when I say primary income, that means achieving a cash flow today. So every month I can get something out of the stock market to spend. Okay, clear? So that's how I define primary income, second income. That means assuming that I have no other jobs and my main job is to just make money out of the stock market for me to spend. So in that sense, like for example, secondary, I always talk about my snowballing machine. Who you all can remember? So my wealth should snowball, should accumulate. Okay, so whereas my primary income is really about, with the fixed amount of the investment or capital I have. Okay, hopefully the capital stay and I'm able to generate cash flow out of the same amount of capital. Can okay, if you're confused, please let me know. If you're confused, please let me know what's the difference between secondary and primary. So when we talk about secondary income, we are talking about expected. This is per annum. PA stands for per annum. Okay, we are talking about 6% to 8% per annum return. Okay, 6% to 8% per annum return. Okay, so which is the dividend yield lah. Okay, dividend yield. So why 8%? Like for example, okay, I always talk about whatever you buy today, maybe based on today's price, based on today's dividend, you are getting 6%. You're getting 6% or even 4% or 5%. But you talk about 10 years later, 20 years later, right? Okay, based on the purchase price you paid like 10 years ago, 20 years ago. So obviously dividends going to increase based on your purchase price. Previously, you are getting 7%, 8%. Okay, so it's possible. It's possible. So like I always tell people, I bought Singtel like 20 years ago. Based on my current dividend versus my purchase price, then I'm actually getting like 12 to 15% dividend yield. So it's definitely possible. Okay, so whereas primary source of income, I expected about 20 to 30% per annum. So that is the expectation. That's quite a fair expectation. This is what the successful trader are getting. Okay, so of course I don't plug this number from sky. Okay, so for those full-time successful trader, this is the kind of results they are doing. So this is definitely achievable, 20% to 30%. Okay, so expected time required. So one is secondary income. So we are talking about 3 hours per week. Okay, so you probably just need to monitor the market 3 hours per week. Whereas primary, like I said, you should treat this at least like a full-time, at least like a part-time job. So every day have to look at the market. Okay. In terms of investment horizon, so every time I buy, I'm expected to hold for at least 3 to 5 years for secondary. Whereas a primary, I always hope that I within 1 day I can sell. Okay, I shouldn't hold more than 1 month. Okay, basically trading. Okay, so that's how I define primary to secondary source of income. Any questions on this? Okay, hope it's clear. Any questions on how I define primary and secondary source of income? All good, okay, great. So of course now, I still have my secondary income. So basically, like I said, 70% of my funds is actually in dividend stocks. I'm getting dividends now and then. Okay, so that is still going to stay. It's just that now I wish to grow this part. Okay, So why do it very important? So what's my motivation? So basically, hopefully I don't look like my age. So I am 50 this year now, a little bit of midlife crisis. So hopefully I can, one of my bucket list is actually to be a nomad. That means I can travel and work at the same time. So that is what is something that I hope to do in a very near future. Okay. So if you just go and travel, then the work are also a bit sian. So my thought is really like for example this route. So by the way, I didn't plot this route for fun. So I have been planning already. I really really wish to go one day. I start from Ho Chi Minh, then after that, go China one big round. Then after that, from Hong Kong to Dubai, Dubai to Croatia. Then after that, slowly make my way to uh, London. So I've been planning this. Just need to have one or two more things to come in place. Then I'll go. So of course, uh, my thought is like, hey, every city I go in, then I'll stay for 3 to 5 days. Really really like nomad. It's not like just travel for sake of traveling, and if like certain place can stay longer. Then of course, number one, I need money. Okay, number two, I also think it's good that it's also important to generate income. Whether we need it or not, that is secondary. But it's always good to what do you call that? Generate some income along the way. Along the way. So the joke is, if let's say on that day, wow, then my I can make more money. Then I go to eat at a restaurant. Okay. If that day lose money, I eat bread. So anyway, yeah lah, bucket list. That's what happened when I don't know lah. Of course, some of you can advise me. But I realize as I hit 50, I'm start having very funny thoughts. Okay. Anyway, the point I want to put across here is this. So please, the objective have to be very clear why you do it. Okay. Don't just say, oh, I want to do it for money you know I want to do it for money then in that case, if the commitment is not there, then it's very hard for you to successful. I'm trying to get at. Okay. So who don't invest for money? Everybody invest for money, and then of course the more the merrier. Okay. But if let's say you just like not bad, 20-30%, try lah, then you are definitely going to fail Oh, so the why is actually very important. Okay. Seriously, if let's say, for example, I'm based in Singapore, my primary job won't be investing. Okay. So to be very frank, again, I don't know, is it midlife crisis? I would need a job that I would need to have a job whereby I believe I am contributing more to either the society or to another human being. Okay, if you ask me like our primary job as a trader, I don't know. That's not me lah. That's not me. Okay, but why I actually want a primary income now is, of course, as to what I mentioned, I want to travel a bit. Then a good way to subsidize this trip is actually from trading. So hope is clear. Hope is clear. So the point I really want to put across, if you also wish to be successful, of course, everybody can go and trade. Okay, everybody can try to earn primary income. Okay, but to be successful, I think the motivation must be strong enough. That's what I'm trying to say here. Okay. I think I asked this question a few times, maybe for the benefit of those who didn't get it. Like, how many percent of the traders can consistently make market money from the stock market? Anyone can help me here? I think I definitely asked this question before. Maybe for those who just miss it. Okay, 5%. Thank you so much. Okay, so I think ChatGPT, Google will give you the same answer, but only about 5% were able to consistently make primary income. Okay, so of course, to be that 5%, your motivation must be strong, the commitment must be there. Okay, also that's why I really want to share this part. I think this is actually quite important. Okay. Okay, now after the wine, okay, by the way, I want to give you a spoiler. By the way, I'm not successful yet. Okay, for those who think that, oh, I have worked out a system, I have worked out a system to generate that primary source of income very confidently every month can, confirm at least get 500. Sorry, yeah. Uh, the Unfortunately, it's not happening yet. Okay. I've started trying to generate primary source of income 2 years ago. Okay, with my options investing, I'll talk a little bit more. Uh, uh, haven't really success yet. Okay. Doesn't mean I lost money, but like for example, or every month can have generate some cash flow, guarantee some cash flow. Definitely not there yet. Okay, I did not lose money, but I also did not have not have a system whereby I can consistently make a monthly income. That's what I'm trying to say here. So down here, I just want to share my learning so far and what I will do next. Okay, what I wish to do next. Okay, so hopefully again, these are something for you to ponder about for those who really want to get into trading, want to generate primary income. Then you ask yourself whether is this for you or not. Okay, I started off with options. Do me a favor here. If you know what is option already, don't mind how many type of one. If you don't know what is option, please help me type a zero. Okay, good, good. Okay, most of you actually know about it. Okay, great. Okay, so for the benefit of those who don't know what's the option, I just give a quick intro. Definitely not enough for you to get into it. I just want to give you a sense of what is it. So basically, option is just a derivative instrument for two parties, between two parties. You just think of it that it's a contract between two parties. Derivative means the value of this contract is based on certain underlying instrument. That's what derivative means. Yeah, it comes over derive. The value of this instrument is derived from somewhere else. Okay? So basically it's a contract between two parties, and the value of the contract is derived from somewhere which is the underlying stocks. Okay, okay. Oh, 9:30 p.m. soon. No lah, no lah, it's okay lah. I'm not going to trade. I can trade later. Okay, so between buyer and seller, this option called option contract, there's a buyer, there's a seller. The buyer actually pay a premium to the seller, okay, and after that get a right. Then the seller will actually earn the premium, but then have an obligation. Okay, so the example is actually this thing called the put option, which is what I have been doing. Okay, what's the put option? So let's say I buy a put option from you. So I'm the buyer, you're the seller. So like I said, it's just two party, me and you. I'm the buyer, the seller. If I buy a put option from you, okay, I have to right to sell a particular sell a stock at a particular price to you. Example, $100 by a certain date. Okay, so let's say I'm the buyer, the seller. I give you an option premium. I pay you some money. Then after that, I have to right to sell a stock to you at $100 by a certain date. For this example here now. So if let's say the price stay above $100, the option will expire worthless. So basically, let's say for example, the market price is 110. Okay, then it doesn't make sense for me to sell to 100, correct not? I will sell to the market at 100 at 110. Okay, so that means the contract will be worthless. Okay, the contract will actually be worthless. But if let's say the price drop to below below $100, I can sell the stock to you at $100. Okay, I can sell the stock to you at $100. So it's like for me, in my case, when I buy a put option, it's like me buying a price insurance for a stock. Okay, it's like me buying a price insurance for a stock. Okay, so for those who actually type zero, if it's starting to make a little bit sense to you, don't mind just help me type a 7. If you're still lost, help me type a 6. For those who just type 0 just now, I'm introduce you to what is the option. Okay, if let's say it's making a little bit sense, type a 7. If you're still lost, type a 6. You still lost, Okay, I have another example. Okay, maybe it will clarify. Okay, now, so this is how my option screen look like. So let's say, for example, of course, the numbers will be updated already. Okay, this stock is Tesla. Tesla. So Tesla today's price is $329. Okay, $329.65. Okay, so what I usually do is I sell options. Basically, I'm the insurance seller. I sell insurance. Okay. If I want, I can sell this particular insurance. I can sell insurance at $287.50, as you can see here. Okay. And once I sell, I get $1 lah. $1. Okay, so options, their lot size is 100 shares. So everything times 100. So basically, I get $100. Then I need to provide the insurance until this date, which is 22nd August. So this is what happened here. You can imagine me, I'm just an insurance seller. So I sell this insurance to another party. Like I said, just between two person. So now I'm the seller, I sell to you. So I sell things, I get $100. Okay. So if the price remain at 320 above 287, if from now till 22nd, if the price remain above $287, okay, this contract is worthless. This insurance is worthless. Okay. But if let's say the price, anytime between up here up to this date, go below 287, okay, you can actually sell your Tesla stock to me at $287, or I actually need to buy Tesla from you at $287 based on this contract. So I need to actually pay out 28750. Okay, Elisa, is it better? If it's better, if now you have a better understanding, press a 7. If not, you type a 6. So that's what option contract will do. Okay, for those who actually type 0 just now slightly better, type 7. If still lost, type a 6. So anyway, of course, the whole option thing is a huge topic. It's a huge topic. Okay, it's a huge topic. Okay, I'm not going to dwell a lot into this. This is definitely not an option session, so I just want to let you know that, yeah, it probably take a while to understand. So maybe today I just introduce. Okay, I'm not going to dwell into it. So I think for those who are not too sure, you just think of me as selling insurance. Selling this thing called the price insurance. Okay, selling this thing called price insurance. And with that, I can receive premium. And of course, it fall in very nicely. I wanted a primary income, right? I wanted a primary income. Okay, I wanted a primary income. So this premium is actually going to be like a very good primary income. Okay, so I'm an insurance seller. I get primary income. Of course, the downside is if let's say the price drop, I have to honor the contract. I have to go and buy the Tesla stock at, it's not sure, don't go into it until, okay. Of course, on my side, I have to honor contract. Let's say price drop, I really have to fork up 28,750 to actually go and buy the option. Buy the stock, underlying stock. Okay, so I actually done this over the past 2 years. Actually not too bad. This is actually just for my platform. My winning rate is actually 83.4%. So out of 100 times I actually sell puts, right? Okay, 84 times, actually, I just collect the premium for free. That's what it means. Okay, so basically, if I sell the put option, nothing happens. The price remain above what we call this called the strike price. Remain above the strike price. I just keep the premium, nothing happens. So out of 100 times, 84 times, nothing happened. Okay. But of course, there's the 14 times. Yeah lah, I had to fork out. Luckily, so far, okay, I get my money back lah. Okay, luckily, so far I get my money back lah. Okay, which is like for example, this is I think one of the trade that didn't go well for me. If I'm not wrong, my strike price was about $220. Okay, it went below. Then I have to fork out 22,000 to go and buy lah. Then of course slowly I eventually can sell back and make didn't really lose, but also didn't make money at all lah. So sort of I have to wait for the stock market to go back up again. Okay, then slowly okay, so I have to basically I bought at 22, then I have to wait for the market to go down, come back up, sort of to make sure I don't lose the money lah. Okay, so what are some questions? Okay, Darren, I totally agree with you. So for those who don't know what is happening, please don't go into it. Okay, so once you see the word derivative, is high risk, super high risk. Okay, so don't understand, don't go into it. So Darren, I definitely with you on this point. Okay, okay, so there are some comments. Okay, so the premium is, of course, can be different premium, different time. Like for this particular case, yes, premium is $100. But if let's say, for example, if I were to offer a lower, let's say I even want to lower to 280, I only get $72. Okay. Okay, so I think this is the part more important. The point I'm trying to put across here is this. I'm actually not bad. I'm actually not bad, but it cannot be 100%. And once I have a wrong trade or whatever you call it, wrong trade, lousy trade, okay, it doesn't mean I lose my money. So what happened here is this: I just have to take the money out to go and buy the particular stock. Like in this case, I think I bought it at $22,000. Then in order for me not to lose the money, I have to wait for the market to come back up. Simply put, at $22,000, sell 22,000, then I won't be making any losses. Okay, so what happened here is this. Yeah lah, when times are good, I just got a premium. Yes, I can hit the cash, I can generate a cash flow. But once I got one wrong trade, my money stuck inside the pump, 22,000 stuck inside. Then I have to wait lah. Okay, now how it works here is this. Okay, like for example, go back to this example on Tesla. Okay, to simplify the example, right? Okay, let's say I don't have any leverage. Leverage means borrowing money. I don't do any leverage, don't borrow money. Okay, I need to have, for me to just do this trade, I need to have 28,750 in my bank account, in the account, in the trading account with them. I need to park this money there so that I can do this trade. That means the platform will assume that you must make sure that you can really fork out the money. Okay, so if let's say, for example, in this trade, right, okay, the option get exercise, it don't go my favor, that means I have 28,750 stuck inside with this stock already. Then my subsequent trade, I cannot use this 28,000. I have to have some money. Okay, if you all know what I'm talking about, don't mind just help me type a 4. If you don't know what I'm talking about, please help me type a 5. Okay, thank you so much. Okay, so basically, this is my experience so far lah. Yeah lah, quite happy. I was actually quite happy for 1 year leh. I think for the first year, my winning rate was 100%. First year lah. Wow, I tell you that time really very happy. Very happy. Then after that, I think after year one, then part things don't go well already, then money gets stuck. Then I have to wait now. I have to wait. So the point I'm trying to say here is this, yeah, then once I wait out, then I cannot generate that cash flow. So unless you're right, unless I have a lot more money, because once you start pump, then that's it already. I cannot continue again. Okay. Then of course, there can be situations whereby if the price don't get back how. So of course, when I actually pick up the stock, I do my 6 tests. I make sure it's actually not uh expensive. I do my DCF. So like for example, this is real case of First Solar. It actually go into solar panel. It was doing very well until one event happened. Anybody can remember which event caused its stock to come down? Eric, you're right, man. I feel like I got up for that year. And you are totally correct. Like nothing can go wrong. Okay, First Solar, I was very happy until there's thank you so much. Once Trump get into presidency, then this thing happen. Because he don't believe in clean energy. He keep on want to burn coal, burn gas, whatever. So there can be situations whereby really price drop, then don't get back. Then of course then I may really have to incur. I mean, luckily frankly, this one I think I waited for 1 year. I waited for 1 year, then sort of get back my capital. Okay, so for that 1 year, my capital is actually stuck there. Oh, so yeah, didn't turn out too well. So the learning point I have here is this cannot have 100% winning rate one. uh, I think even I 84%, I think must already, I don't know what, must thank God, thank whatever already. So if you think that you can have 100% winning rate, no lah, I think it's not practical lah. So my point here is this: if you come into this thinking that you can have 100% winning rate, that is a wrong thinking lah. That is a wrong thinking to have lah. So we must be realistic lah. So if you ask me, I can do 80% already, very good already. Okay, so the question is how to do that 20%. So the thing is, you need enough capital. I think some has actually put it very correctly lah. You basically need a big, a deep pocket to sustain this kind of pitfalls, which I am not prepared to put in yet lah. Okay, so I think my capital was only about 10,000. So what happened here is this: I actually did leverage. Leverage means borrow money. I think I borrow up to 4 times. So I sort of have capital for 40,000. Okay, 40,000. So this one pump 22,000 stuck already. Pump. So I only left 18,000. But this on leverage. That means I have to pay interest. Okay, so yeah. This is something that to be very frank, I have no idea how to overcome it. Okay, like I said, today I'm just sharing some of my learning points. And of course, over time, this is something I'm trying to work out. How do I overcome this problem? Okay, so the other problem I realize is you win small, you lose big. Okay, like for example, for Tesla case, my maximum I can get is only $100. Okay, if everything go in my favor, okay, this Tesla case, if everything go in my favor, I make $100. Okay, max is $100. But if somehow for whatever reasons, after I do this, Tesla bankrupt Tesla got suspended or whatever, Tesla stock becomes zero. You cannot say it's impossible. They have stocks that become zero before. Then I lose 28,750. Okay, so that is options. So the question is, so is this a good way to generate primary income or not? Okay, oh, so like I said, I have no answer. And yeah lah, I will keep figuring out lah. Oh, so again, why I'm sharing this is hopefully, I hope that I don't know, I just want to let you know that for those who really can trade successfully, well, not easy lah. So someone like me who has been doing investing for the longest time, 20 years, but started trading, also doesn't mean that I have any advantage. So I just want to give you a sense, not easy, not easy. Of course, for those who already know how to do it, please share, please share. I'm very keen to learn from you. Okay. So there's a question from Richard. Do you have a system to determine the strike price you're prepared to bet on? Yes, I do. What I did is for all the stocks I do, I have a DCF lah. I have a DCF. Like I recently did on Qualcomm. Okay, I think we have Qualcomm here. So I recently sell a put on Qualcomm. Okay, Qualcomm. Okay, we did DCF in May, right? Okay, maybe I just pull out Qualcomm's what I call that DCF. I just it's here. Okay, so I have a DCF on Qualcomm, so 147.98. So my strike price, I want it to be below 147.98 lah. Oh, Richard, answer your question. So in fact, I get it at 144. 144. So to me, I try to only just target at $1 or $100 premium around that range, $1 premium. So I can get it at 144. So that's how I determine my strike price. Oh, Richard, hope that answer your question, but nothing is definite. Nothing is definite. Okay, like I said, I think for First Solar, same thing. If I'm not wrong, that time when I do a DCF was actually about 300 plus. Okay, but so I get strike at 220. I thought, wow, quite safe. Okay, but it thinks it also didn't turn up. Okay, thanks for the question. Anybody else has any other questions? Okay, let me just check. Uh, can't find the finance manager. Python coding. Oh yeah, correct. So of course, yeah lah. So there are algo traders, things like that. Darren, thanks for sharing. Yeah. Okay, so that's one thing I try to do with to generate primary income. Like I said, yeah, I was successful for 1 year. Very happy, felt I got like what Eric say. But once I got a loss, pump, wow, then the whole thing jam already. The whole thing stuck already. So I have to wait for me to recover that 22,000, which interestingly took 1 year, then I can restart again. So not really primary income per se lah. Oh, I have to think of how to overcome this. So of course, one is getting bigger capital, which we'll see how it goes. Okay, so next thing I did was I did trade with technical analysis. I was actually trading this thing called the Ethereum future. Okay, so one thing interesting about trading in this market is this. Okay, so of course this is a crypto market lah. So some of you may be asking me, wow, how come wow, so risky wow. Okay, why I actually got interested is because this market is traded 24/7. Like the US market, US market you have opening and closing time. I'm actually quite worried about it lah. Okay, because if like let's say when the US market close, then after that there's a major event happening. I don't know, the US market, US economy crash, then Trump have very funny what they call it, policies again, so on and so forth. Then when the market open now, the price can be like way different. So you have this very huge risk. Okay. So why I actually did this Ethereum future is actually because it's 24/7. So it doesn't close. You can buy, sell anytime. Can buy, sell anytime. Oh, so that is the reason I go into. Of course, I also met into some 损友啊Alan, you know what I mean. I always bump into friends that lead me to the dark side. Okay, so anyway, uh, so I actually did some TA. I do very simple things. No, I actually did this thing called a trend. Okay, I try to find a trend. Like I can see this is trending downwards. So by the way, when I did this, I play both sides. So I do long, I do shorts also. Okay, so like this one while like trending down. Okay, so of course, if you were to sell here, then you buy here, you make money. Sell here, buy, make money. So there's a trend. Then the other thing I did for TA is actually do pattern. Okay, so when I see certain pattern, like for example, you buy here, you sell here, you buy here, you sell here, you buy here, you sell here. There's a pattern. Okay, so again, I don't know why. Very interesting one. I think they call it beginner's luck or whatever lah. So every time I start, wow, actually quite happy. Okay, but this one not 1 year lah. I think this one 3 months. It lasted for 3 months. So my lucky streak lasted for 3 months, which very happy already. Wow, I remember that I never ate so much restaurant food during that 3 months because somehow you make money from trading. It's like, make money from trading. It's like, wow. Again, feel like, wow, like I can repeat like that. Yeah, yeah. I think Eric put it very correctly. A 3 month demigod. Yeah, thanks Eric for helping me out here. Wow, okay. So of course, after a while things don't go well. So basically, these are my learning point. A market is still random. Okay, to me, all this pattern, all this trend is okay. I put it very blunt. Okay, I hope I don't put it bluntly. Is you can't really there's no science to it. Okay, it's a bit like you yourself bluff yourself. The way I put it, the way I see it, it's like, oh, okay, you see down, up, down, up, down. Okay, you will repeat again. So actually, when will this pattern break? It's totally random one. Or like for example, this one down, down, down. When will this downtrend continue? Will it bounce up here? Will it bounce up here? Bounce up here or bounce up here? It's totally random. So only when you get it on hindsight, then you feel that, this follow trend like works. But next time you follow doesn't work already. So my learning point is all this trend, all this pattern, no lah, cannot lah, doesn't work. History is not a guide, market is always random. Okay. So if I were to do this alone, my success rate is at best 50% only. Okay. So if 50%, then again, you win $1 today, you lose $1 tomorrow. You win $1 today, lose $1. Then you again cannot, don't meet objective of generating primary income. Yeah, lah, I feel entertained. Make money very happy, lose money very sad. A bit like, like my mother go to jackpot machine like that. Then that don't make money. 50% you don't make money. Okay, success rate 50% means you 50% of time you win $1, 50% of time you lose $1, then you never don't win anything. Okay. Then of course down here, again, these are things I'm still trying to figure out. How do you manage greed? Like in this case, when the market move in our favor, we should let it run or take profit. Okay. Then after that, of course, when trading, we have to do cut loss. Also, the question here is this: at what point do you cut loss? Okay, a lot of people say, you can structure 10%, 20%. End of the day, it's not so easy lah. Okay, I give you an example. So let's say I do pattern. Okay, I do pattern. So down here buy, down here sell, down here buy, down here sell, down here buy, down here sell. Let's say, wow, third time already. Okay, so I think down here is a buy. Okay. So maybe you'll help me here. So, okay, assuming of course we don't know what happened after that. So down here, will you all sell or not? Who, if you think you will sell type 1, if you think you won't sell type 2. Okay, because based on pattern, okay, assuming of course we don't know what happened after that. We assuming you don't know what happened after that. So based on pattern, okay, buy, sell, buy, sell. So down here you will sell, right? Down here you will sell. Okay, here, yeah, same as let's sell. Then after that market didn't come down, then continue to go up there. So go up, go up, go up. So down here, it's like, That means this pattern changed already. So maybe it's a good time to buy here lah. So a few times I caught it, okay lah. Then I just go and buy. Okay, buy it, then market come down leh. Oh dear, oh shit. Okay, market come down. So down here, you want to cut loss or not? Okay. If you will cut loss, you will cut loss, don't mind how many type of 7, you will not cut loss, don't mind how many type of 8. Will you cut loss here or not? Okay, not bad. We have a next answer. Maybe we can discuss further. So anyway, it's like, okay, must cut loss. So basically, I learned, okay, I'm still trying to figure out. So one thing is, okay, if I lose more than 10%, I better cut loss, which I think this case more than 10%, I'm going to cut loss. Then sell here, then how? Want to buy or not? You know? Then okay, so the thing about discipline is also not easy to keep. Like for example, it started off as a pattern, now the pattern change. Okay, but somehow you get so stuck into it. It's now market moving up, will you actually want to buy? So things like this, it's like, after that, the pattern change, do you actually wait for the next pattern to form, or do you actually start going to it, you see? It's easier said than done. A lot of people say, you just set like limits 10%. Once you 10%, you cut loss. Then you trading profit 10% gain. Then you just take profit. Okay. I'm not saying they're wrong. I'm still trying to figure out what is the best way lah. Okay. So these are the again, just go through a learning point again. So my point is this, okay, the pattern, the trend is still random lah. So to me, or at least to me, okay, by the way, this is to me lah. Of course, I know some TA may not agree with me. History is not a guide. So I'm actually still doing at 50%. This is the part I need to work a lot more lah, the greed and the loss mentioned part. Okay. Okay, one other thing I did is actually this thing called copy trade. Quite interesting. Okay. So yeah I was quite lucky. I bumped into this guy. This guy was very nice. He allowed me to copy his trade, and I must say he's really very good. So what I understand, of course, he quite accurate. He quite accurate. So what I understand here is this, I know now there are some people that can track what they call hot money. Okay, I was told there are some people who can track hot money. So once the hot money come in, of course the market will go up. Some hot money come down, market come down. Okay, so this guy I'm following, his direction is very accurate. Okay, direction is very accurate. But not the timing. Okay, like for example, okay, of course this is a little bit exaggerating. So there are times whereby he said, okay, so even down here there's further upside, which is true. There's a further upside. Okay, so he's correct. Okay, but of course, you have to wait lah. You have to wait. They come down, then have the upside lah. Okay, so the thing is, again, it's actually a test of your own faith. Because okay, he cannot be 100% correct. So let's say he's 90% correct, or even 99% correct. So when this happened, he down here, he buy, he said he's confident that it will go up. Do you have that faith, or do you think that this could be that 1%? Okay, so it's not easy for me to keep the faith. Okay, I see a lot of questions. Thank you so much. Let me just go through the question first. Can't fight finance they have volume. Okay. Would you be interested to start investment club with those who are running investment? Good to have some hand. Okay, we talk about that later. So from Darren, Nasdaq president started discussion. Oh, okay. Thank you so much. That's a good news. So basically, we can trade 24, about 5 days a week also cannot. Then Saturday, Sunday, especially now, like for example, one bomb hit certain places, the market corrected. So this one is 24/7. Okay, but anyway, thanks for the good news. Which web platform you using for trading? Okay, for options, I'm actually using my Tiger. Okay. Then for the crypto one, I'm actually using Gemini. I'm using Gemini. Okay. YX, thanks. Okay, learning point, I'm not made to trade. Okay, thank you so much, NRL. I think then I have met my objective. Okay, I also want to let you all know here is that, okay, a lot of us always get tempted into trading, me included. So my point here is this, you see people make money like very easy, just buy here, sell here, buy here, sell here, like very easy. I also one thing I demonstrate here, even people like me, okay, not that I'm smarter than you, it's just that I'm actually doing this almost as my primary job. Okay, I'm definitely not smarter, but I probably is spending more time than you all looking at the market. And yet it's still not easy. Okay, so for those who are actually really want to trade, so really have to think carefully. Of course, I'm not saying you cannot be better. It's just that you have to speak time, you have to put time. There's a commitment there, lah. It's not about you're just lucky, so on and so forth. Okay, you cannot do this based on fear or greed. Not easy, lah. Okay, that's the thing that we have to work it out. Okay, like Eliza's point, I don't know, like for example, a lot of gamblers, if you speak to those like very compulsive gambler, those really can, after that sell wife, sell daughter, sell house type gambler. When you talk to them, so a lot of time is they also start off saying that, okay, I have some certain control. But once they get into the casino, right, wow, they become a different animal altogether. So that's a problem in trading also, I realize. It's very hard for you to say that, oh, I want to go and do trading, then after that my heart rate still the same. I'm not sure. I think the traders will understand what I'm talking about. So it's either you don't trade at all, but once you trade, you have to accept it. We're just human after all. We have greed, we have fear. It's very hard to say that, oh, okay, I keep that aside. Also, but yeah, so in fact, that is the thing I'm trying to control. Okay. Stephen, you got to help me here. What is ODTE? I'm not too sure what exactly is it, ODTE. Trading can be correct, still lose money. Eric, yeah, thanks. Yeah, maybe Stephen, you add on that. Okay. So yeah, so 0 day to expiry. Okay, I don't know, like sorry. Stephen, I'm actually my options knowledge is actually quite limited. I'm just playing put options. So I'm not too sure exactly what is that. Maybe one day we can sit down and talk about this. Huh? Okay, so anyway, I'm here just to share my I'm here just to share what I've gone through. Like I said, I unfortunately I don't have a success story to share with you guys. This is what I will be working on, okay, for this coming 6 months. Okay. So the main thing I want to stress upon is, okay, end of the day, I think the key thing is you still have the system. I need to have a system in place. Um, I it's not just about, oh, okay, go and learn better TA, no, go and copy better person. It's about what is that overarching system. That is something I'm trying to figure out. Like for example, for the income stock one, I more or less came up with that system. So basically, dollar cost average, just go and buy, hold, collect dividends, just go and roll. Okay, that's the overarching system. So you think about it. So basically my income stock, there's two parts. One is of course choosing the correct REITs. Okay, how do I actually pick up one REIT over the other, one stock over the other? So the other one is how do I accumulate REITs? So every month buy one, buy two, so on and so forth. So I actually have a system. Okay. So now the trading part, I think that the key thing is I need to have an overall system. Okay, which hopefully within the next few months, I can figure that out. So one thing that I keep trying to um draw relevance is that casino story. Okay, okay. I've been talking about this casino story. Again, just help me here. If you don't know what this casino story is about, can you help me type a zero? Okay, if you already know what is this casino story, help me type a one. Okay, let me see. Do I have time? Okay, I have a little bit of time. Okay, we will end if latest status by 10. Okay, let me just talk a bit about the casino story. I think it's important. Yeah, for those who know, it's also good, a good refresher. So, okay, we talked about this. So casino, okay, answer me. Casino will always make money, true or false? Casino will always make money, true or false? True, okay. So in this case, casino use science to make money or use art to make money. Okay. What? Let me define science or art. Okay. Science means when they repeat the same process, the outcome will always be the same. Okay, that's science. Art means if they repeat the same process, the outcome can be different. So casino use science or art. Okay, science. Thank you so much. Over long term, it's actually science. So basically to say, casino uses science to always help them make money. Okay, and because it's a science, if they have the science in place, then they will always make money. So this one we all agree. So what science does casino use? So basically, casino use two science. So one is actually the science of probability. The first science that the casino use is actually the science of probability. So I remember, okay, I don't remember I showed you this. So this is the American roulette. So to play this game, very simple. You just throw the ball, spin the roulette, and see where it lands. So if you see carefully, there is 18 black, 18 red, and 2 green. 2 green, 18 black, 18 red. So if you bet black, what is your probability of winning the game? Okay, 18 black, 18 red, and 2 green. Total 38. If you bet black color, what is your probability of winning this game? Okay, can someone go up to the correct percentage? Percentage. Less than 50, correct? But what is the 47? 47%. It's not 50%, 47%. Which means to say, you as a gambler, your chance of winning is 47%. That means the casino, or what we call the house, the chance of winning is 53%. Okay, so that is their first science that they use, science of probability. Okay, all the gains are in ways in the favor of house. In this case, 53% versus 47. Okay, next, there's actually this thing called the law of probability. The law of probability states that, when this game is played enough time, okay, the outcome will always equal to the probability. Okay, so let's say this game is played 1,000 times. Okay, the gambler will always only win 470 times. The house will always win 530 times. Always, always. It's a science. Okay, house always win 530. Casino, the gambler always win only 470. So net, the casino will always win 60 times. 530 minus 470 times. Okay, so with this size in place, then all they have to do is keep having a lot of people come and play. Then with that, they will always win one, confirm win one. It's not a function of luck. It's not a function of art. They will always win one. The science is actually there. Okay, so this is the casino story. So I have been always using this to plan my investment. So basically, to me, to win in my investment is definitely not about art. It's not about I lucky or not and things like that. So in terms of stock investing, that's why diversification is very important. Okay, then you have to do it over different time. Then like for example, now I can dare to say louder lah. So all we have to do is wait for the market, like in this case, to go up. Okay, which is happening. I'm quite sure all you're quite happy, especially those who have followed me for the longest time. Okay, now market 4,000. If you have kept a portfolio, no matter what, it should be making money. If your portfolio now not making money, then something is wrong with it. Okay. So So it's we're definitely in the money lah. So the thing here is, yeah, now I'm thinking of how to have that. Now how to have that. What do you call that? Um, the trading system, using this casino story lah. So of course, this is actually something I will be working on for this coming few months lah. Okay. Hmm. To put it in investing terms, so I think the stock instrument selection, there's no change. I'm not gonna change that. Okay. So if let's say I'll do options, same thing, I'll only do for stocks whereby you'll pass my six tests, the PDCF, actually all decent. Okay, there's no change. So the only thing is the portfolio management part. I'm trying to figure out what is the system. Should I have a price target? Cut loss, how do I do that? Is it 10%, 20%, or should I fix it? Should I be flexible? Should I diversify? Okay, so this is for trading, of course, for investing and diversify. So this one, should I diversify? Of course, diversify, then there's a capital outlay lah. Okay, leverage, should I be borrowing money? Okay. And should I play both sides? Okay, so for trading, you can play both sides. That means I sell first, buy back later. We call short. Okay, long means I buy first, buy and sell. Short means I can sell first, buy back later. So should I play both sides? Okay, so these are like I said, sorry, I don't have the answer yet. And this will be my project for the next 6 months. Okay, any questions? Okay, let me see. There are some questions already. Let me just check it out. Okay, where do you learn to trade options? Okay, I used to run, okay, not me lah. I have a partner that run options course. If there's interest, I can just try to get him to run another one. Okay, and again, I'll answer your question very soon. Eric, not use feng shui meh? Ha ha ha. I don't know leh. Maybe okay. Maybe you give me another 10 years, then I go into quantum physics already. Yeah, so that is also something very interesting, but yeah, I'm not there yet. Okay, Stephen, I will answer to your question very soon. Okay. So just to round off my this discussion. So again, like I said, based on what I said up front, okay, I'm not definitely not encouraging you all to do trading. Okay, what I've shared so far is my own personal journey. I hope that I have illustrated to you trading is tough. Okay, even for someone who actually look at it, on an active basis, on a primary basis, is also not easy lah. It's also not easy. Okay, then of course the other point I want to put across is okay, I think the system part is, or the portfolio management part is also quite critical for the success, which of course, unfortunately, I don't have the answer to it yet. And that is something I am working on. And of course, end of the day, whether you want to do primary or not, hopefully you all take this opportunity, take this trigger to think about your own investment for the next 6 months, up to 31st December. What is your objective? What are you trying to achieve? Please start planning lah. Okay, please start planning. I have shared my plan. Like I said, my income portfolio is actually still there. My growth portfolio is actually still there. This is something I want to do in addition. Okay, and yeah, this is something I'm going to spend time on. So in your case, from the investment part, what I'm going to do. Okay, so hopefully these are some of the conclusions you are taking back. Yeah, of course, yeah, like I said, it's still there. Okay, any questions or comment on this part?